they think that the buy property market is too hot,
Yep.
to use the terminology that you said.
How long you go into history?
Right.
So I think again, if like any investing, at the moment we're looking at areas, and we're like, where's the new supply today? Because we've been in a period of time where we weren't seeing much new development.
It doesn't have to be based on data. It could just be like your general thoughts on like areas you've been watching, and
Yeah.
because it would just be really good for our reels.
Yeah.
Okay. Yeah. Great.
Yeah.
Michael, what a pleasure to have you on the first episode of the Meeting Room podcast. So the Meeting Room podcast is a new channel which we've opened for our audience in hopes to educate our audience and bring a little bit of value. Hopefully we'll have some weekly guests coming. Dr. Michael Waters, is our very first guest, and he is, in my opinion, one of the most experienced property experts in the market today. So what a pleasure to have you. And if you wouldn't mind, Michael, give the audience a little introduction into yourself and we will get started.
Okay, well, thank you, Theo, for the introduction, and also for inviting me onto your very first episode of your podcast. Hopefully I can give some value to your listeners. So, as you say, Dr. Michael Waters is my full official title, I guess. And my background is an academic. I came here in 2009 and set up and launched the university's MSc Real Estate Postgraduate Programme with Heriot-Watt University, which is essentially a programme to allow majority of people working in the sector to upskill and gain a university qualification in real estate. So we're RICS accredited. So my background is very much an academic one. I've obviously worked here for close to 15 years. Before that I was working in London, became a chartered surveyor, which again is what a lot of our students go into, and really enjoyed really enjoyed that experience of starting an educational program in Dubai, and hopefully over those 15 years added value to the students that have come and studied with us.
I'm sure you definitely have. So let's just touch a little bit up on the educational aspect there. From my experience, trying to educate yourself on the Dubai market can be a bit of a challenge. It can be. And hopefully that you've solved this for myself and our audience. And Michael has actually brought his book along with him today. And this is a new launch. And this is essentially all the information that you need to know about the Dubai property market and Michael's 15 years of experience into how many pages, sorry?
Close to 300 pages.
Close to 300 pages. So would you mind just telling us a little bit about the book? I believe it could be quite beneficial and add some value to our audience.
Yes. So the kind of the structure of the book is 12 chapters. It's very syllabus led. It's not high level academic dialogue. It's supposed to be an easy to pick up and read reference to Dubai and a nod to Dubai's evolution. So it starts off talking about the economics of Dubai, how it's grown and established itself as a global real estate hub. It moves through into looking at the investment activity between residential and commercial sector, the opportunities and challenges that have been presented historically, and then it focuses in on those sectors. So it looks at residential and the 20-year history of Dubai. Since 2002, foreign nationals have been able to buy into Dubai. It kind of looks at that 20-year evolution. It then moves into more practical chapters about why people should think about Dubai as part of their global property portfolio. Then the middle part of the book looks at professional practices, things like buying and selling process, leasing law, evaluating a property purchase here, how we can set that investment appraisal up, and how we can actually start to analyse our expected returns as we go through our journey as investors in Dubai. And then at the end of the book, it picks up on future trends, things that I think are going to make Dubai even better place to invest and live in. So sustainability and smart cities are kind of the focal point of that.
Wow.
And so as you say, the audience is anyone who's kind of interested in Dubai real estate, whether that's a new agent or a new graduate who comes to work in Dubai, as well as those that are curious about investing here. I feel the book gives people context. It's very data driven. Obviously, I said I'm an academic. I would be doing myself a disjustice if I didn't provide data and information in an impartial and clear manner. So that's what I've tried to do, and I think as you say, I've been getting good feedback from people who've bought the book, and it's kind of aligning to what my aspirations were. So I think it's doing its job at the moment. So thank you.
Well, I'm very excited to get to dive into this book.
Yeah.
Definitely on a personal aspect.
Yeah.
Okay, fantastic. So with what we do here at Realist, we are very much a technology-driven based company. And I'm interested to hear a little bit about your thoughts about the evolution of technology in the property industry and the benefits that this has both brought to investors and developers, and maybe potentially some of the future challenges too that you see for the industry in regards to technology.
Yeah, I think, as I said, the themes in the book, I've taken this evolution view. So how were things and how have things got better? So I think technology can only become a suitable platform if we go back a step and have the data. So Dubai in 2022 was recorded as a global transparent market for the first time in regards to the JLL Transparency Index, which is a global benchmarking study that's done by JLL that measures that. So a big part of what's now available in the market today versus historically are things like the DLD open data platform. So the DLD that register all the transactions in Dubai have made that, a public search engine. And obviously the underlying platforms that provide further data, companies like yourself as well as others, are taking that raw data and they're providing more depth. So technology is now beginning to kind of sophisticate the information that an investor gets. Historically, you had to price in a big chunk of risk because you couldn't even see. If I was buying a 2-bedroom in downtown in a particular building, I couldn't search anywhere to find out what that transaction was. I'd have to reach out to some of my contacts or some friends, and obviously not everyone has that. They don't know what value is in Dubai, so it becomes quite problematic when you're looking to invest here if you can't find transactions. But of course now we have that information. What we're starting to see is evolutions of things around, which I think is really exciting, and again I talk about it in the book. One area which I think would help boost investment demand is the valuation, the automated valuation models that we can or banks can use to risk assess the assets that they lend in. So I think if we have if that process is done quicker, more efficient, and more technology led, then we don't need to go through kind of valuation reports. We can do it desktop, and the bank can monitor the risk of these assets against the lending or the loan amounts. And what that should start to lead to is more diversity in product. And as I say, I've said in other sort of conversations I've had before, I hope that banks start to pass on that efficiency by offering first-time buyers, end users, and more stable occupiers of real estate a more favourable product. And I think in a market like we're in now, where interest rates are high relative to what they were, we need that kind of product here. So technology can help solve that problem.
So ideally, the accuracy of the valuations will improve because of technology and data, and hopefully this will reflect in a lower interest rate potentially for the investor. Is that?
Yeah, I think when you've got transactional data we start to then price the market based off comparative evidence, which is what a mature market normally is done. But What that then allows is you reduce the volatility in or the gap between one person's opinion, whether it's a buyer or a seller, or it's another valuer to another valuer. You reduce that gap because we're all seeing the same information. And technology platforms like yours go a step further because they remove the bias of us going about and collecting data and deciding the priority of that information. Technology will automate all of that and present us the facts. And I think, both in my PhD and in the book, which I touch on some of those elements, that's where bias comes in. So whether we're investing as an individual or I'm a valuer working here, I'm naturally going to have some human bias in my judgment. Technology removes that and makes it much more emotionless, which is what we need, I think, to receive as the output. We need to see, okay, what is the date? What are the transactions telling us? Moving away from having sort of a benchmark or a certain price value in our head, that's going to mean that we're either fairly optimistic or pessimistic with our view of Dubai.
Interesting.
Yeah.
Interesting. Okay. So just to conclude then, back when you first arrived in Dubai, it's a lot of guesswork. There was no real transactional data on what properties had been sold for which price. Rental values was anyone's guess, or whoever had the biggest check, I'm guessing. So now with this improvement of data and data analysis, investors can make a lot more accurate decisions on their purchases. And I imagine this has had a massive positive impact on the property, both volume and price, because as more investors get more confidence in the market, they are more likely to transact, aren't they, or choose to transact within Dubai.
Yeah. I mean, if we look at the institutions, so I move away from the residential market for a moment and look at institutional money, which is the money of funds who want to deploy capital into commercial assets, office towers, income producing buildings in Dubai. They're gonna look at, or they historically would look at Dubai and say, I've got sparse transactional data, so I can only really indicate in my assessment a range of values that are quite wide. So I'm not getting confidence that the asset that we're going to acquire has enough data behind it to have a clear and clean decision. So therefore, the only option for them, if they're going to acquire asset at that time, was to price in more risk. I want more. I need to discount. I need to have a higher discount rate in my assessment of this cash flow, because there's more uncertainty behind what all of this might translate to in the future. So whether it's us as an individual or an institution, we're buying an asset on today's data, aren't we? We're on, the rents are tied to the information today, the price is today. We don't know what the future's going to look like. When you've got more data and more transparency, that can be you can reduce the amount of risk, so therefore you can accept a lower amount of risk on the property, because you are essentially getting a more stable market, because you've got more information to base that decision on. So another example would be, whenever I've acquired property, I acquired my first here in 2011. As I said, I couldn't search any portal to find out what I had to pay. So I had to say, well, what's the rent today? And I want 10% on my I want a 10% return, because that was the only rational way that I could decide whether I would buy that property. So when you've got transactions and you've got more time series, then there'll be more information around long run averages. We kind of know the range of values that Dubai has seen, because we're in the third property cycle. And of course today, if I wanted to buy a 2-bedroom in Burj Daman or Burj Views or anything around us where we're sat today, I can search that. I can see what the last 3 months transactions are. So I'm no longer pricing in the 10% return aspect. I can actually validate, is 2 million, 2.4 million, 2.5, is it a sensible price to be paying? I might still run my own appraisal, because I want to get a return on my money based on my assessment of the market, but at least I can see what the market's been paying. and therefore I can be more rational with my decisions. So that's where the better data, that's how it helps investors.
Yeah.
And as a marketplace, it reduces volatility. Of course, if you've got a market where everyone's building in risk at 10% and 12% returns, you're going to get quite large differences in prices.
Okay, yeah, well, thank you very much for that insight, Michael. So I think that a lot of our audience want to know the evolution of the market in Dubai. You've been here 15 years, which is longer than most, and clearly gained a lot of experience. So I think that your insight on that would be very beneficial to our audience.
Okay, so I think the major, again, alongside the better data, which we've just spoken about, you've got a whole raft of regulation, and that ranges from how property assets are managed through the service charge collection and having an owners association with audited accounts that RERA have to sign off on those accounts, and then they get distributed to the owners, so that gives a bit more transparency behind the billing of service charges to investors. Also, we can search service charges, so we can kind of see the historical context to that information, which is, again, if you're looking at net returns, that's quite a useful thing to have. I think one big change has been in the off-plan market, the evolution of or the establishment of escrow accounts, removing some of the risk in the market in the sense of having it's almost like a deposit account for the funds that every off-plan purchaser would pay into, and then the RERA kind of can oversee that account, so that it's essentially an account that the developer can't access without getting to certain construction milestones. So if I was buying off plan and you were buying off plan, my payment plan would go into a separate audited account that was that is established at a certain point of the pre-development stages. So the developer has to apply to get one of these escrow accounts before they can off-plan sell, and then as an off-plan purchaser, I can search on the DLD website and validate that account exists for that development and that project, and then my payment would be paid into that, so that at certain milestones that then gets released into the project. So it's much more protection based. We're not, so for example, a developer would have a litigation case against them, they can't use that money to pay off debts. It has to be paid into that. It has to be money that's spent on the construction milestones of that project. So it ring fences the investor's money, so that there isn't this situation where
the investors aren't going off on fancy holidays and buying private jets, the developers, once they've got their money and running they did in 2007, 2000.
Yeah, it's very much protecting that side. And equally, there's protection for the developer. So if I'm an off-plan purchaser and I'm not fulfilling the contract, it's a bit like a landlord and tenant agreement, isn't it? At a very similar sense, you've got obligations as a developer, you've got obligations as the investor. If one of those parties breaches those terms, what's the resolution? So a common one would be time delays. So in your SPA, there'll be clear statements in there about if the project is not delivered by a certain time, what is that reasonable amount of additional time that the developer can kind of manage, because of course property development is risky, and when you buy off plan, you're basically buying into that risk. So with the best intentions in the world today, a developer might say the project's finished at the end of 2025, end of 2026. It might run into some delays for whatever reason, but what is a reasonable amount of time for that party who's buying into that contract to wait? So it could be 6 months, it could be 12 months. Beyond that, there'll be a recourse that purchaser could actually kind of then put forward to obviously fast forward the project or receive some level of compensation from the developer. So
it swings and roundabouts then, doesn't it? It's not just
to protect
the
both
investor,
parties,
but also the developer.
Yeah.
Right. Okay. So very beneficial and adds a rather large safety net, which I don't believe was there in around 2007, 2008 when we had
the escrow laws came in originally in 2008. They then got amended in 2017.
Right.
And that period of time from 2008 to 2017 saw a lot of cases. There was a lot of cases as Dubai's matured, and obviously a lot of the like in any market, whether I do landlord and tenant in the UK or other markets, the sort of terms of engagement are built off previous legal cases, and the revision in 2017 was to kind of give more clarity on how these cases could be heard. So there's certain capital requirements as well of the developer. So this isn't off-plan selling is not a free lunch for the developer. They need to put some capital in themselves, or they need to have a mechanism in place to safeguard what the investors are putting down. So Article 11 is the kind of law for escrow accounts that lays down those foundations.
Yeah, fantastic. Yeah. Brilliant. Yeah, I think it's 20%, isn't it? So the developer either needs to be 20% into the development, or have at least 20% in the escrow account before they can start selling off plan.
Contract value, yeah.
The contract value. Yeah. Okay, and 100% of the land ownership now, because I often heard a lot of developers kind of had no skin in the game back in 2007, 2008.
Yeah.
They were approaching a local. They were asking if they could develop on their land. The local said yes. They were creating all these CGIs and these beautiful looking projects, selling them, but had no actual real investment or vested interest once they've got them reservations to get the projects complete. And that's kind of where it all fell wrong. But the DLD and the Dubai in general in regard to legislation seem to identify problems and adopt new laws to resolve them very quickly. So hats off to them for that.
So I think a similar example with the rental increases. So landlord and tenant law, back in the early days, you had landlords being able to charge whatever they felt was, well, the more the merrier, I guess it would be, wouldn't it? Then there was a temporary rental cap. So sort of 2007-8, when the market was getting hot, they came in with that you can't increase it more than 7%. That was quite temporary. And now we have the laws where we've got a rental index, where we, as a tenant, you can check the average rate, and beyond, the landlord is only permitted to increase it by up to 20% if the gap is, 40% or more, whatever that yardstick and milestones are. So, like with any market, you've got to, the legislation catches up with the growth, don't they? And I think in that first wave of Dubai's growth, it was finding its feet, and I think the market's very different. So we've mentioned transparency. It was a very opaque market. It's now, independently recognised as a transparent market by the JLL report that I mentioned. We've got more detailed and regulated parts of the real estate sector, which allows people to have more confidence. I think, the rental increases. We've got to think about the affordability of a city, so that people keep coming here and can afford to live here.
A massive factor, especially if they want to sustain the 2040 growth plan, isn't it? Yeah. Where Dubai plan to reach 10 million, is it, in population?
2040 is, I think it was 5.8 million.
5.8 million.
There is an expectation that it might surpass that.
Right. Okay.
On the current growth rate, but of course, all planning is with the best intentions, isn't it? So, I agree. I think they've done the right things. They've been a very open-minded government to take on board that and to action it quickly for the betterment of the market. And I think that's why we have more trust in the market nowadays, and we have more activity in the market, because it's built on a better foundation.
Yeah. No, fantastic. Yeah, I agree with absolutely everything you've said there. So a lot of our clients are worried at the minute. They think that the buy property market is too hot, to use the terminology that you said. And is this a bubble that we're in? And is it potentially going to burst soon? I'd love to hear your opinion on that, and I think everyone
I
else
get
would
worried
too.
when I get asked bubble questions, but no, I think look. I mean, if we go to a bit of rational thinking, I think Dubai is undervalued. So when we say a bubble, we kind of expecting. We're basing it on a very short term view. So we're looking at COVID, which was a trough of the market, and we're saying the market's grown. I mean, it's grown differently in different parts of the market, but if we say 30 to 40% in the citywide index, but is that a fair? Is it fair to take that trough and look at where we are now as a suitable percentage reference point? It probably isn't, because of course the market dropped, and then it's the V-shaped recovery that I expected at the time came real. But of course, when you're working with percentages, you've got to have a wider look at the market. So I'd look at things over a 5-year period of time. Obviously, it's been a much softer growth rate. You've got to look at things about the affordability. So the affordability. So studies who look at other markets look at the affordability. So that's largely built on a median income versus house price ratio, and Dubai is measured at fair value or reasonable value, and isn't in the high risk bubble territories of other markets where the median salary that people are getting in those markets versus the house price are much higher multiples. So I think Dubai on a very from a global perspective is still being measured according to that metric as a reasonable indicator that a bubble isn't in the making.
Yeah.
But I think also when people are asking we're at the point of the market where we're hitting a third peak. So we're kind of close to the second peak of 2012. So anyone buying now needs to recognise that they are buying at that point in history, and we've been there 5 times before, on the upside, the downside, the upside, the downside. So this is the 5th price time in Dubai's history that we're at this price per square foot. So it's the market has tested this price point before.
And do you think we are in the right position currently to potentially break this price point and exceed those highs of 2012, 2014?
Well, I do. It just depends how long you go into history.
Right.
So I think again, if like any investing, you're buying on the back of a good plan, aren't you? If I invest into a company, I have belief that company is doing enough to make profits in the future. That's why I invest in Google or Apple or whichever firm it might be. I'm not a stock picker, so that's probably a bad example. But investing in Dubai is about believing in the fact that the city offers good value in the long term. And I think one of the core aspects is the rental return. So the time it takes for you to receive your capital back is relatively short compared to other markets, regardless of where we are in the price point. So as an investor, if I can get 8%, and a lot of investors are getting more because they're leveraging off the tourism in Dubai. So if you've got, let's take 10%, you're only waiting it's a 10-year hold period before you effectively get your capital back if things stay as they are. So it's a relatively short amount of time when we look at other markets. To get your capital back in 10 years would be fantastic. So there's a lot of economic growth opportunity here. People are, all cities are suffering from the fact that they're going to be larger in the future. There's an urban population growth worldwide, and it's the developing economies of Africa and the Middle East that we're going to see most growth. So again, even if you just look at population forecasting, we're likely to be in a better position. Is the city going to be better than it is today in 10 years' time? Is the question I would ask myself if I was investing here, rather than worrying about, am I buying at the right time?
Right.
Because you can't time you can't time anything. There's a range of different assets that we could look at and say, I should have done this, I should have done that, I should have bought here, and it's only based off hindsight, isn't it?
Yeah.
So you've got to when you're investing today, which is current day, we can't go back in time and change anything. We have to look in 10 years' time. Is Dubai going to be a better city than it is today? And, make that assessment ourselves. And I think from my own view, yes, it will be. And there's a lot of merit to the real estate market because of course the growth, the surpassing the growth of the other peaks is I think is going to be built off the fact that Dubai is good value,
right?
Internationally good value, and you've got better data to make the decision. So you put those two things together, you'll see higher prices.
So
but it won't be a linear rise. Be ups and downs.
Of course,
and changes.
Like any stock, like any market, there's going to be ups, there's going to be a downs. And as you mentioned, we are at a up at the minute, aren't we? However, it's just whether people have the belief in the market and the belief in the economy that we can surpass the previous heights of the market and continue to an extended growth period.
So what will change that dynamic is new supply. If everything else stays the same, we'd need to see new supply outstrip the demand. So at the moment we're looking at areas and we're like, where's the new supply today? Because we've been in a period of time where we weren't seeing much new development, because during COVID, which developer's going to be launching new product? Now we're having that point where developers are launching. So again, there's going to be a point in time where the market will be tested. So we need new buildings because we've got population forecasts. If we don't have the new buildings, everything becomes unaffordable, and Dubai looks unattractive to live because you're going to have high rents and high prices. So it's not good for the city, for the economy. So I appreciate the fact that there'll be waves and there'll be points where there'll be certain investments which are more exposed to the oversupply. So I think we see much more segregation in the market. There's areas of Dubai which have the threat of the fact that there's a lot of land available to build in. There's a lot of projects that are going to be potentially built where you've invested, and there's going to be others that aren't going to see those because they're more established. There's no more space in the marina or down. Well, we try and find space in downtown, don't we, and build higher, but there's going to be a point where that gets absorbed. So the investment is like any market. You've got to look at where there's going to be a lack of demand, and I think again, going back to your platform, you're making awareness to the fact that the information you're providing a client fulfills that analysis. Looks at things objectively, and people can identify. You need to look at the good and the bad, the pessimistic and the optimistic. If it runs well in an optimistic scenario, then it looks like a good investment long term, doesn't it? If I'm going to buy in downtown Marina, some of the central areas in Dubai, it doesn't really matter what happens in the middle because people are always going to flock to that more central location. Versus other areas that might not be so fulfilling for the audiences.
Interesting. And just because it's quite relevant, I'm interested to hear your perspective on Jebel Ali and the launch of the new Palm. What you think the market dynamics going to be like there for the next couple of years? And
it's an interesting. I mean, I'm only one thought. It's that whole Dubai launching a mega project, and then saying it's further out. It's it's twice as large, I think, as Palm Jumeirah, but development will. I mean, the 2040 plan and some of the parts of the book, it's all mapped out. Where's the future development going to be? It's going to be in these, waterfront property in Dubai has a premium. I think we're all familiar with that. And so, Palm Jebel Ali is a waterfront project. It will attract a certain amount of appetite. It will have its build-up phase. People will enter in at a certain price point and make money, and people will come in later on and pay a higher price to be in that location. So it all depends on people's risk appetite. I think I think if we look at the actual plan of Dubai, that area 1 and area 2 is where they want to contain the future development,
Right.
so
Okay.
that you get efficiencies. I mean, you don't want to be building randomly out in different parts of areas 3 and 4, because you've got, you know, the way the infrastructure is managed here. You know, you don't want to be putting dearer connectivity far out. You want it high density and, you know,
Right.
clustering and agglomeration and people living in proximity and
Yeah.
having kind of complementary retail and mixed use is what I think is attractive for most. You know, if we look at the marina downtown, you live, you work, you play within short geographical areas, and Dubai is mapped out very polycentric, so there isn't this single core to Dubai where there's this you know, one location where everything is the focal point. There's actually, you know, 5 urban centres to Dubai, and that's spread across the coastline, set a bit further back, marina downtown. You know, the expo site is an urban centre that they want to focus on. So these are going to become, you know, the polycentric centres of Dubai, which again is good because you have diversity of housing choice, you have different price points, you have relative affordability within short distances. So it offers a resident population, whether they're renting or buying, a range of price points. You know, we don't want to all buy, or we cannot all buy super prime residential villas as much as we might aspire to have them. So a city, a competitive city, has to have diversity, and also has to have infrastructure where people, you know, sustainability. You want to be within a 15 minute sort of journey time of your work, of your social space, of where you live. I mean, that's the sustainable form that most cities are having, and polycentric cities are more sustainable than monocentric cities, because we're not all crowding into one urban centre. Sorry to get economics and theoretical, but I think that's where Dubai kind of... So I haven't probably answered the question in its true sense, but if that's an urban area that wants to be developed, it will get its critical mass. It will become an urban centre of Dubai, won't it? So it's just part of the growth plan.
So there could potentially be huge potential in Jebel Ali. It's all dependent on what price point you get in at, and also the trends, and I guess of the particular market.
Yeah, I mean, it's like there's multiple examples that we can rattle off. You know, I mean, back in the early days of Dubai, you know, JBR was seen as a very outlier project, but of course it's on the beachfront. So similarly, Jebel Ali, it offers waterfront living. You know, it's not in the middle of the desert. Yeah. So it's not going to be one of these projects that is not offering the residents or the investors a waterfront lifestyle.
So when we're talking about locations, because what are the main driving factors in? Obviously, I know that you've got a PhD in valuation, so I'm sure everyone wants to hear this. Yeah. What are the main factors that you would consider in a location that would drive capital appreciation or an increase in the property prices? What are the main kind of boxes that needs to be ticked?
Well, again, I mean, the fundamental, you know, without saying location.
Yeah.
We all know that tagline, but you know what that means is, you know, accessibility is a big part of it. How accessible is that location to other parts of the city? Desirability, you know, what is it? Again, a beachfront property, a waterfront property is desirable, and it's measured in the price premiums. You know, green space. I mean, all the international triggers, and I think this is where Dubai has done a good job of kind of capitalizing on that opportunity to, because of course you can look at Dubai and say you don't need to build into the water, but that's what Dubai offers you, doesn't it? You've got these flagship buildings. So again, in the book you look at things like you know, Burj Khalifa as an iconic tower. You look at all the amazing architecture here. It all has leverage in terms of people coming here, people visiting, people seeing you know, the dynamic aspect of Dubai. So I think going back to the question, you know, accessibility, desirability. So desirability is having the amenities around you, the leisure, you know, the lifestyle benefits, the the retail, the mall, the F&B. So again, within quite short geographies, you can be near a mall, you can be at a mega mall, you can be at a regional mall. We've got malls, haven't we? And there are social spaces. Especially this time of the year, we need spaces like malls, retail malls to and our green spaces. They're a lot of them are golf courses, so they're run as a revenue generating part of the city, but they also offer that vision. We need green space. We need we get I think not stimulated, but we're happier when we see the sunshine, which we obviously have, when we see the water, when we see green. It's a vibrant colour that for some reason I'm not a true doctor.
I don't think stimulated us.
But so it kind of, those things all have value to them. So I think investing would be central areas desirable. Again, a long-term investment would, this is a place where people want to live. Often when the market does go up, people compromise.
Right.
They can't afford location X. They go further back. And of course the desirability of that in a downturn would be, well, people will flock back to the city centre. If you can't live in downtown, you go further back.
Yeah.
But when the market's lower, you go back to downtown because that's where you want to live.
Right. Okay.
So if you choose those core central locations on a long-term basis, you'll have more stability in your cash flow. Capital appreciation is obviously going to be driven by what that when you buy into the project and what that future project's going to materialize into. So you're going to have to, obviously the risk and reward element is you're holding, you're paying, you're basically financing a development for the project. Collectively, all the off-plan sales are financing a project for the developer. So the opportunity is, well, in 3 years' time when that's finished, I'm going to see 30% capital gain. Now that's not guaranteed, but that's the theory behind off-plan selling. So I mean, I looked at Dubai, income return, total return, income return, capital gain, and a total return on the 15-year time series that we have. So when data was cleansed and all suitable, you're looking at about 11.5%, and a big chunk of that is income return. The 8% of that is citywide. This isn't looking at particular things. So citywide, you're looking at 8% income return, and 3.5%, perhaps 4% as a capital gain to give you that total 12% annualized return. So capital appreciation happens because it's a new. I think the most common examples would be you're buying into a fairly new development. So again, JBR is a really good example. The Springs is a really good example. When they launched, they were selling for like 400 dirhams a square foot. What do they sell for now? But again, it's been flipped and flopped along the way. So I think a good project would tick the criteria of when it's complete. Is it going to serve? Is it going to have those desirable aspects to them? That's how I would evaluate it. Yeah.
Fantastic. And this is a real valuation from a doctor. So, okay, fantastic. I guess my next question to you is: there's recently, because of the reopening of COVID, we've seen a drive and growth in property transaction value and volume.
Yeah.
And what do you think have been the main factors which have led to this growth?
Okay.
It would be interesting to hear.
Yeah, I think one of the major things that's seen growth is just the population. The population has grown, whether that is because the world was, Dubai opened itself up to the world during Expo. So again, one area of the book looks at what impact did the Expo have on Dubai, and where is the price gain. And most of the other examples internationally where, apart from the hosting of the Expo, I can't remember where it was at the time, but just shortly around the financial crisis, all the other expos saw most price growth, within the 5 years post event. So again, that exhibition people came here for expo. People came here during COVID, lived here, experienced it short term, and saw the opportunity, the lifestyle benefits. So it was a huge opportunity to have an exhibition of Dubai as a city, what it can offer, breaking down all the misconceptions that people might have about Dubai. So the population growth has been a big impetus to the price. The fact that also the last few years we haven't seen as much inventory coming onto the market means that what the existing stock has been absorbed fairly well, and therefore prices, when we see the upcycle, that absorption takes place. That's happened quite quickly. Now there's a competition for space, so that's pushing the prices up. That's signaling to developers to build because they can get more value for their projects, and then we're likely to have a period of supply coming on. It just depends on whether that population growth is going to follow that supply. If it does, we'll see stabilized, softer price increases, and if it doesn't, we'll see downside opportunities, I guess, if you want to call it that. So no one knows how that's going to play out. But as I said, the intention would be, if the city's growing at a fast pace, we need to build more, because we need to keep Dubai attractive. It needs to be affordable. We can't lose sight of the fact that we want people to come to Dubai, or the government want people to come to Dubai to live here and thrive. I mean, that's the success story of Dubai, isn't it? People come here because the opportunity is here. So I think and of course, I think again the last couple of years we keep hearing that more millionaires are coming to Dubai. It's attractive for different segments of I think the opportunities in Europe for a young workforce are probably not as good as they used to be. That's also attracting more people to come and even try Dubai short term. There's more flexible visas. People can come here. They hear stories from their friends. That multiplies. They come here. They stay here. They find work. So that is an organic growth scenario as well, which I think Dubai offers people. The scale of Dubai as a city over those 3 cycles has improved. It's at a scale now where we're getting the benefits as residents to live here. We've got a lot of F&B, we've got a lot of good employment, we've got some of the largest multinational companies setting up in Dubai, or of our offices in Dubai. So it provides opportunities for the residents, whereas during the early stages the city's more fragmented. Now we're at a sort of critical mass where it feels like a city. You move around, and it's at a scale that is attractive. I still think it's not a large mega city. It's still a small enough population to be attractive on that side. So economic growth and population growth again will stimulate prices. The flip side would be supply pipeline and how much development comes online. But as I said before, medium term we do need a sensible supply to come onto the market to factor in the fact that the population is likely to get larger.
Fantastic. So a lot of our audience are in between their investment strategies, so a lot of them hear about the potential returns that they could make in the short-term let industry or the short-term let market, and then a lot of them prefer the stability of the long term, and they don't quite know where to go, because as you mentioned, now it's easy to commute around Dubai, and a lot of these places on the suburbs are actually becoming more and more popular choices for short-term lets. For example, I heard someone the other day talking about using Jumeirah Village Circle, an apartment in Jumeirah Village Circle for short-term let, and they were talking about a rather high occupancy rate. But I thought that could be some risk there, especially in off-season. But I'd like to hear kind of like an overall opinion on where you would guide our audience there in regards to that, and what aspects you would consider for each area or each strategy.
Well, I think the short-term letting market is very dependent on on the tourism infrastructure. So that would be, again, being near metro stations, being near restaurants, even leveraging off being close to the hotels that are there, so that when you're staying in a residential building, you've got a good infrastructure around you. So I think certain areas in Dubai aren't suitable for short-term letting, and I think the further inland you go, the less suitable they are, as a general rule of thumb, isn't it? There is, the Palm will always be attractive for holiday or for short-term letting. So you've got to remember the fact that, why are they short-term letting? They're either here on holiday, or there's a short work. It might be a relocation, it might be a workplace assignment. So that property has to be surrounded by amenities and infrastructure that would be desirable. And I think we're not going to be you're not going to be going too far into the suburbs on a short. So I think you need to be sensible to where you pick them. So again, if you look at those polycentric districts, somewhere like Dubai Creek Harbour, a new development, that would be fairly attractive, because it's got the sheer scale of amenities there. It's in a new vibrant part of the city. Of course, you may, obviously, when you're looking at more established areas, you're paying higher prices, aren't you? Because the track record is speaking for itself. Yeah. Whereas the new areas might provide better value, perhaps. So there's those things to consider. But I think the fundamentals would be, you need to be near the amenities. You need to be, people need ease of movement, ease of getting to the nice restaurants. They don't want to be suburbanized. Is a sort of short answer to that.
I'd want to hear, maybe in terms of personal perspective, if you were going to be investing into Dubai today, where you'd be putting your investment, your money. Is that okay to ask?
Yeah, I mean, I feel I've answered it, but if you want to put it into that again, I'll be looking,
as in like a specific location.
Okay.
So
I've not analysed it. I mean, that's the only thing. I haven't really dug deep, but we can ask it. I mean, it's fine.
Where are you going to go for?
I don't know. Trying to think. The thing is, I don't want to pin it on one development.
No, that's fine. Just general area where you see the most prospects potentially.
Well, again, I haven't really looked at it.
If it's something that you don't feel comfortable with, I mean, it would be beneficial. Maybe top 3. It doesn't have to be.
I can't even think of one, let alone.
It doesn't have to be based on data. It could just be like your general thoughts on like areas you've been watching, and because it would just be really good for our reels.
Yeah.
Okay. Yeah. Great.
Yeah, go on then.
All right. If you want, because this would be for Instagram Reel, you can maybe just do maybe a brief explanation about each one and try and keep it within 60 seconds, so we can post it. Okay. So Michael, I think everyone's interested to see, given all your experience, where are your top 3 investment picks in Dubai today, and a little bit of reasoning behind them.
Okay, I'll try and give a few examples. I mean, I think what I've said so far is that I'd be looking at those polycentric districts and those core parts of Dubai, particularly because you can leverage off, that it can be more dynamic. So your investment could be for your own use. You could long-term rent it. You could short-term rent it. It has options to it. Is what I mean by that. So I think, an area like Dubai Creek Harbour potentially offers a good opportunity. It's a new district. Even some of the build out of Dubai Hills again probably is attractive. It's kind of on that central corridor of Dubai. A resident population that don't want to be too far inland would occupy that space, and it has the track record of good performance because people are living there and moving there. So it would be those areas that I would look at as well. I guess for the tourism market, I might extend that to somewhere like Emaar Beachfront, or something that's got the water frontage to it. Because again, those locations will be attractive. The amenities will be there. You're coming in while most of the infrastructure is being established. There's still an opportunity around that, I think, to to get in before it's fully established and fully grown up. So I mean, I think the key messages that I think I've tried to sort of say to you today is that despite all the development going on in any market, buy as much as you can, as close to the centres as you can.
Yeah.
And obviously, that will mean that during more challenging times, there'll be occupancy in your investment units. So again, a short-term rental might be working quite well now, but if it needs to turn into a more traditional rental, is it still got the demand that the product has? So of course, some of the big trends that we're seeing outside of in all global real estate is that people want more space, or seemingly want more space. So again, I might extend that to a more established community, and buying something that is ready might also be an option to look at. So of course it will be a comparative analysis between time spent retrofitting and versus the time and value I'm getting by buying an off-plan project. So I think Dubai offers a lot of opportunity. There's a range of product here at various price points, and I guess most of the development is now geared towards some of the longer term visa as well. So people might start making decisions based off the fact that if they put the 2 million dirham capital down, they get the benefits of a long-term residence. So it's very personal to different people, and of course, what one development is attractive to one investor may not be to another. So it does depend. But I think as a kind of a look at what's coming up on the city that isn't completely new and completely starting from scratch, but has a critical mass to it, they would be my three areas there that I've highlighted.
Now, Michael, I know you're not going to like this one.
The curveball.
The curveball.
Okay.
So, top 5 developers in Dubai today, and your reasoning. I kind of can see where this one's going to be geared towards, but
where do you think I'm going to go?
Emaar, Nikhil.
Well, I think Emaar have certainly, would be at top of the list for the reasons that they are. They've got product that's stood the test of time. So again, if it's a new market, you don't want to be taking a chance on a tier 2, tier 3 developer. So Emaar offers not only a good product when it's built, but obviously good asset management. They're projects that people want to live in, as the residents that they go for Emaar as well for the same reasons. So Emaar would be there. Nikhil would be on there. I think the major ones, Nikhil, Miraz do some good product. Dubai Properties, Dubai Holding. 5th, I'm sure I've missed one off that's fairly obvious. I'm trying to think of one of the top ones, but I think sticking to those would be. I mean, that's certainly how I've viewed Dubai. I've looked at, and any market, I would look at developers with a track record. Yeah. So I'd particularly if I'm buying off plan, because I want that history of service delivery. The fact that when they've built something like Dubai Hills, as an example of Emaar project, the photographs, the schematics look like what they do on the ground. I think they're big things that would kind of be in my forefront of my mind. I'd want that confidence. So I might be paying a premium for that. But of course, like any service, any other industry, you pay premiums for security, stability, certainty. So I think those sort of core developers would be in my top 5 list. Yeah.
Fantastic. Michael, it's been an absolute pleasure to have you on the podcast today. Thank you very much for your helpful insight on the Dubai property market. And please don't forget, if you are interested about the Dubai property market and want to educate yourself further, please look to Michael's handbook, which can hopefully help you guys and educate you to a point where you feel a lot more confident in the market. So this has been the first episode of the Meeting Room podcast, and we hope to see Michael very soon. We hope to continue to bring you some very experienced people from the industry, and I hope to see you again next week.